So, what if I told you that the key to your financial peace of mind isn't really about how much money you make? What if it's about a concept that most of us completely overlook? Today, we're going to talk about the invisible weight of wealth and what it really takes to feel financially free. It all starts with a feeling that I think a lot of us know all too well, even people earning a ton of money. It's this persistent anxiety, this weight that a bigger paycheck just never seems to fix. The numbers look good on paper, but something just feels off. And see, this isn't just about trying to accumulate more stuff. It's that crushing weight of obligations. It's the thing that can steal your sleep and just chip away at your confidence. It's that constant mental math, that feeling that every single dollar is already spoken for before it even hits your bank account. And this all leads to a really interesting paradox. Why do so many people who are, technically wealthy on paper still feel so financially trapped? And this isn't just a feeling, it's backed up by data. A Goldman Sachs report found that a staggering 40% of Americans earning between $300,000 and $500,000 a year say they are living paycheck to paycheck. I mean, let that sink in. This tells you that this isn't just a simple math problem. It's a structural one. It's a situation where wealth has been built, but in the process, something way more valuable has been destroyed. So if it's not about the raw numbers, what is it about? Well, the answer lies in this really powerful idea that almost nobody talks about: financial margin. Now here's the key thing to get. Margin isn't just about your assets or your net worth. It's the financial and mental breathing room around those assets. It's the buffer. It's what lets you handle a surprise, a job loss or a medical bill without your entire life just going off the rails. Think of it this way. It's a great analogy. You can have a full tank of gas, right? But if you're tailgating the car in front of you with zero room to brake, you are one sudden stop away from a massive crash. In this scenario, your net worth is the fuel in the tank. But margin is your braking distance. It's what actually keeps you safe on the road. Okay, so how do you actually build this stuff? Well, it's a pretty systematic process. First up, you have to face your numbers. You got to get brutally honest about every single debt, every interest rate. Then you attack the high-interest debt, the stuff that's just eating you alive. Next, you hunt down and slash those hidden costs, like all those subscriptions you forgot you had. From there, you can focus on increasing your income. And then, maybe the most important part of all, you have to stop the cycle. You got to stop taking on new debt while you're trying to clean up the old stuff. But what happens when it's not just one person with no margin for error, but an entire country? For that, let's take a look at Japan. I mean, they went from this incredible post-war economic miracle to a massive, massive bubble, and then just nothing for decades. Can you imagine that? Their stock market tripled in just 4 years. Then it crashed, and then it stayed basically flat for over 30 years. It wiped out the wealth of an entire generation. Think about investing in 1990 and seeing almost no growth for the next 3 decades. It's wild. So the big question is, why? Why couldn't Japan just bounce back like other economies do? Well, it was this perfect storm. They had what are called zombie banks, basically dead banks kept on life support that were funding failing companies. You combine that with major policy delays and a really crucial demographic shift. And this is where the comparison with a country like modern India is so telling. In India, you've got this young, ambitious population. That creates this incredible internal demand. People are buying cars, buying homes, starting businesses, taking risks. That powerful internal engine was precisely what the aging Japan of the 1990s was starting to lose. So Japan's story is really about what happens when you kind of passively lose margin. But what about when a nation tries to actively build it as a core strategy? Well, that is happening on the global stage right now. Look no further than China. They are deliberately, strategically maneuvering away from their financial dependence on the United States. They're building strategic margin. I mean, the numbers here are just wild. Over the last dozen years or so, China has slashed its holdings of U.S. treasuries from $1.3 trillion down to under $800 billion. Now, this isn't just shuffling money around. This is a nation deliberately building its own shock absorber by diversifying away from a single dominant asset. Okay, so let's bring this all the way back home. Back to you, because this principle, it's like a fractal. It repeats at every single level, from global economies right down to your own household budget. And when you look at the real data for individuals, it's pretty clear that most of us are operating without this buffer. With nearly 60% of Americans unable to cover a surprise $1,000 expense, there are millions of us driving down that financial highway with zero room to brake. And that brings us to what might be the most important takeaway of all. Real security, true financial peace, isn't about having a perfect plan where nothing ever goes wrong. It's about building a life that can withstand a plan that goes wrong. It's the freedom that comes from knowing you can absorb a hit. So, I want to leave you with this thought. We are all so focused on our net worth, right? The final score. But maybe, just maybe, the more important question is this. How many timeouts do you have left? How much breathing room, how much real margin do you actually have?